expansion of 40 basis points despite the seasonal headwinds. This translates to 15,657 crores. I'm sorry, 15,657 crores of operating profit. Our net margin for the quarter has come in at 19.4%, translating to 12,380 crores. Consequently, our EPS reached 34.21, up 6.4% year on year. Cash from operations at 13,032 crores represents a conversion of 105.3% of net profit. Given the seasonal weakness and softer discretionary demand environment in this quarter, most of the verticals and markets saw a sequential negative growth on a quarter-on-quarter basis. On a year-on-year basis, UK grew by 4.1%, North America by minus 2.3%, and continental Europe grew by minus 1.5%. The new growth markets of India, Asia Pacific, Middle East and Africa and LATAM continue to deliver a good growth, offsetting the weakness in major markets. Particularly, our revenue from India grew by 70.2% on a year-on-year basis. Among the verticals, on a year-on-year basis, BFSI grew by 0.9% and consumer business grew by 1.1%. Energy, resources and utilities grew by 3.4%. TCS Banks and Products and Platform continued their growth momentum. Life sciences and healthcare and communications and media continued to have negative growth on a year-on-year basis. Our customer metrics remain strong and resilient. The number of customers from whom we make more than 100 million rose by 3 to 64 customers on a year-on-year basis. There has been a strong customer movement across all other brands as well. In addition, our customer base of 1 million plus stands at 31,309, an increase of 21 over last year. Our order book closure for the quarter stands at $10.2 billion. Our order book for North America stood at $5.9 billion, and for BFSI $3.2 billion, and consumer business at $1.3 billion. This represents a strong order book closure of over Q2 and Q3 of FY24, giving us a confidence and comfort on the outlook for the future. By the end of Q3, our net employee count stood at 607,354, a reduction of 5,370 on a sequential quarter-on-quarter basis. Our IT services attrition stood at 13%. The board has proposed an interim dividend of 10 rupees and a special dividend of 66 rupees, amounting to about 27,500 crores. This is in line with our practice of returning 80 to 100% of free cash flows back to our shareholders. We are seeing continued momentum in AI adoption. Clients are increasingly investing in agentic AI adoption, building robust data foundation, and taking a value chain based approach for AI and Gen AI-led transformation. We have launched an innovative offering, TCS 5A framework for responsible AI with AWS. This is the first of its kind in the industry. It helps identify and mitigate AI risk holistically. We also saw an increase in successful production deployment of AI Gen AI engagements, leading to greater business certainty and confidence for our clients. Our investments on research and innovation continued. In Q3, we applied for 195 patents and were granted 216 patents. Overall, 8,549 patents have been applied and 4,585 granted. With these updates, I hand it back to Kritika and we can open it up for questions. Thank you. Kritika, over to you.
Thank you so much, Kriti. We'll start with the Q&A. As always, we have Rima Tendulkar from CNBC TV18 going first. Rima, 2 questions.
Yeah. Gentlemen, Happy New Year and congratulations. So Kriti, first question is, growth ex of India was under pressure. So what were the reasons for that? And also your press release reads that there are early signs of revival in discretionary spending in some verticals. So explain that to us and whether deal wins can sustain above $10 billion. Samir, how did you manage to expand margins when there was no growth and the outlook on margins from here on? And Milind, how should we read your headcount declining when attrition went up? And what is the outlook on headcount addition and attrition going ahead?
So Rima, first the Yes, as I said, we had negative sequential growth in all geographies, all major geographies, and to some extent that had a seasonality. And we've been calling out that the trends in Q3, most of Q3, were showing a softness in discretionary demand. So both these contributed to the negative sequential growth in all major markets. But the point that we wanted to emphasize here is the TCV going up after 2 quarters, and TCV going up in North America, going up in BFSI, CBG. All of them portend well for our, at least gives us a confidence on medium term. And we also been seeing improvement in sentiments on discretionary spend. I did talk about BFSI and consumer business, but we've been seeing it yearly trends in few other verticals also. So overall, that's what is giving us a confidence on future. Our pipe, I don't want to put a number, our pipeline continues to remain strong. So there are enough opportunities to sustain the deal wins. At a broad level, seeing what we are seeing today, we would be comfortable in saying CY25 should be a better year than CY24.
Okay. Coming to margins, Rima, in spite of the furloughs and Q3 seasonality, we were able to improve our margins by 40 basis points, and that was purely driven by operational efficiencies coming in from productivity, utilization, and pyramid. And while these levers helped us in this quarter, they do provide further opportunity. And through the year, in the next quarter also, we'll be banking on this lever to improve our margins further.
With respect to headcount, Rima, I think, as I said earlier quarters also, there's no direct, linear correlation with the growth and headcount. And as you know that we have added net 11,000 people in the Q1 and Q2. We also basically on track to get our campus hiring on track of 40,000 people in this year. And so the point is, headcount wise, this is something which is a result of many things, including what Samir said, productivity, utilization and pyramid, and the number is what it is. With respect to attrition, it is at 13% within our comfort range. Going forward, I anticipate reduction in the quarterly attrition going forward. LTM numbers may go up and down based on how it is calculated.
All right, thank you. Next question to Sajid Mangat, NDTV Profit.
Kriti, Happy New Year. You spoke about the fact that you entered Q3 with some of the macro factors like discretionary being slow. As you enter Q4, what are the micro factors looking like, and do you see improvement on those factors for Q4 and CY25 as a whole? The second thing is about the TCV, $10.2 billion, impressive number. If you can give us a breakup of BFSI-wise and geography-wise, because while TCVs are growing, you're seeing a flat growth in BFSI and North America. So there's a difference in order wins coming in, but revenue recognition which is coming in for these two. On margins, you did mention about cost efficiency. If you can give us an idea of how you manage the currency being so volatile, and do you see what kind of hedges you have, and for FY or CY25, what kind of outlook you have on the currency? And Milind, on employee count, you mentioned the fact that it has nothing to do with the growth, but what is the kind of salary hike, if at all you did anything in Q3, and the gross additions that you expect in CY25, given that the campus placements would have been completed by now?
See, on the discretionary spend, while Q3, whatever we saw in Q2 continued, the softness in demand. But looking at the order book and our conversations with our customers, gives us the comfort that there is more budget discretionary spend is likely to increase, and we are seeing early signs of improvement in discretionary spend. And we saw to some extent, even though the overall BFSI growth has been negative, we saw the growth in North America and BFSI to be positive. So that also we take as a early sign. So early signs on discretionary spend revival. I don't want to call it that it is recovered fully yet, but there's a early signs of revival. And on the TCV front, as I mentioned, our North America order book was at 5.9 billion, and BFSI at 3.2, and consumer at 1.3. All of them substantially better numbers than corresponding period last year. We've not been disclosing the number. These are the three numbers that we've been disclosing on TCV. But Continental Europe had one of the strong TCV wins this quarter.
From a currency perspective, you are right. We saw considerable cross-currency movements, and dollar appreciated against most currencies, almost all currencies globally. Rupees defense or the depreciation against the dollar was lower than other major basket of currencies which we had, and that's where we saw, if you see from a revenue perspective, the reported revenue is lower than the constant currency revenue on a sequential basis by 40 basis points. Margins were flattish, and our consistent hedging policy is something which helped us. It's a policy where we limit the exchange volatility through a consistent hedging program, protecting our revenue and forecasted receivables. And what we do is a rolling quarter forward hedge. Well, we'll not look at it because it's a multiple of factors. Our focus is to have a policy which will, limit the volatility on our P&L.
The salary hikes, we do it at the beginning of the fiscal year, which we have done, right? Which we have done. But we have been doing promotions regularly. We have done 25,000 promotions this quarter. If you look at promotions year to date, we have done 110,000 promotions, this financial year. So salary hikes are done at the beginning of the year. Promotions are done through the year, and a good number. Gross additions for the coming year, like I said, we did 40,000 campus hirings. We are on track to do 40,000 this year, this financial year. Next financial year, we actually will do slightly more than that. We don't give away that, but it's one set of national qualifier tests is already done, and from our priority colleges, and a good number of offers have gone out. Overall, the number I expect to be more than last year.
Thank you. Next question from Shivani Shinde from Business Standard.
Hi, gentlemen. Happy New Year to all. Hi. Kriti, a couple of questions here. One is on the India market. Again, grown pretty fast, and it's the regional markets again which is driving the growth. Assuming India is obviously BSNL deal, we are hearing that is going to now come towards an end. How sustainable is this growth that you are seeing in the regional markets? If you could comment on that one. Two, the most awaited date is 20th Jan, when the president-elect takes over. And a lot of concerns already coming out. H-1B visa, what happens to the budget? Anything that you're hearing from your clients or what your sales team is saying from US, if you could share with us. One is that. So two questions for you.
Yeah. So
I'll come to Samir here.
Yeah. On India, definitely we are happy with the regional growth. And in this quarter, growth in India is contributed primarily by non-BSNL. BSNL had a substantial share, but the growth was contributed. BSNL didn't have a substantial contribution to our growth numbers in India. There is a seasonality in India market as well. So that's what played into in this quarter. And we are quite bullish on the regional markets because they've been consistently growing, though on a smaller base, they've been growing. So BSNL, while was not the main contributor. On the budget, it's a very, very early indication. Our early indication is there is a positive bias. for the coming calendar year. But like you said, early days, we have to wait and watch.
Samir, you said that you still have headroom when it comes to margins, operational efficiency. Could you just elaborate more on it? I mean, with growth being slightly tapered, especially from your major markets, what's the headroom that you're seeing? Milind, strong numbers that you are saying for next year. You're saying that effort to onboard a higher number of campus hires. Would you want to share the numbers? Any indication of 40,000? How many more?
You want to go first?
So, okay, yeah. So from the operating parameters or the operating levers which we talked about. So if you saw, we hired about 5,000 each in Q1 and Q2, but we had an efficiency coming in Q3, and that should have an effect coming in Q4 as well. We have been working on the overall pyramid. We are looking at ways and means of productivity. If you look at traditionally on the realization, we have been improving it. This quarter's realization has been flattish in spite of the seasonality kicking in. So these are the levers which I have been working on.
So I think the number will be higher than 40,000. Exactly what it will be, I will let you know. As soon as we'll come closer to that.
All right. Next question from Beena Parmar from Economic Times.
Hi, Kriti. You've seen a sequential drop in the large client base as well. Could you please elaborate as to how sustainable is this? Is it just seasonality, or do you see this long-term going forward? And in terms of your demand pickup, you had mentioned that BFSI is looking up. We've not seen much growth as such while it has come to positive. Which segments do you see further going forward, picking up growth in the next 2 quarters, which will drive
Within
the growth?
BFSI or?
Apart from BFSI.
Apart from BFSI.
And if you could also elaborate your Gen AI deals and revenue momentum, what kind of progress have we seen? And overall, are we likely to see any more applications on the H-1B visa as well? What's the status? How has it been so far? And how does FY25 look like? Milind, if you could just tell us, what are the primary reasons for the drop in hiring? I mean, we've seen 2 quarters additions, and suddenly we are seeing a drop. How should we read this? Is this likely to go on in terms of the reduction? Is it because of Gen AI? Could you give us some color on, how do we see that momentum going forward? Even as freshers are kind of picking up, aren't you doing any backfilling? Could you give us some sense on that?
Okay. So first on the large customer base, there was a small drop. And one is because one particular large customer, there was a divestiture, so it split into 2. So it became, both, though the revenue was not lost, like they are not a $100 million customer anymore. And there was one more was a small drop but it's a planned reduction. So I don't read too much into it. Like overall, I think this will crawl back, and as growth comes in, you would see some of the customers who are in the 90 million range moving into, so that I don't read too much into it. I said BFSI TCV, then obviously consumer business is also where the TCV went up. And Europe as a segment, we find TCV has gone up. So there have been, in fact, almost all verticals. The TCV has shown a very healthy growth. So it is not necessarily only BFSI. Medium to long term, growth should return in multiple verticals. Gen AI, like the momentum is continuing. It's becoming more and more mainstream. That's the reason we didn't want to call out any specific number. But it's also maturing. Like early days for last year, we were talking about simple fine tuning. Then people talked about RAG and all. Now the agentic AI is becoming more and more common with the improved capability of these LLMs. So more complex tasks are being performed. And we also seeing kind of projects that we do. One of the projects involved about drug discovery, where we were able to help one of the customers identify 1,300 molecules. And out of that, help them in further filtering them to 12 molecules for which they can start the assessment. So work is becoming more complex, more rewarding. So overall, significant growth and a lot of participation with our customers. On the H1B, I would let Milind respond to that question.
Okay. I think we have a global operating model and we have a global workforce. We have been driving this for many, many years and a very strong model in place. So our dependency on H1B, is limited, And while we obviously want to provide opportunities to people, but eventually depending on the visa category, I don't think that is a major concern for us, because we have a global model in place. With respect to your second question on the headcount, like I said earlier, headcount is there's no linear correlation with the growth in a quarter. It is a yearly phenomena which we do. When we added 11,000 people, like Samir said, and this quarter it is a function of pyramid, utilization, productivity. All of this coming together eventually results in a certain headcount, and that is what it is. So don't read too much into it.
Backfilling was done. I mean, because
we actually no, but the point is, utilization is there, productivity is there. All of that contribute to backfilling. All of that contribute to backfilling, and going forward, the outcome, the phenomenon will be similar. The headcount will go up a bit based on all these other parameters we play, but.